Afternoon, it's Jeffrey Christian of CPM Group. It's just afternoon on Tuesday, March 1st. I wanted to give an update on gold and silver, and there are also a couple things I wanted to clarify in the markets. First, a little bit of history. On March 1st, 1912, 110 years ago today, this Captain Albert Berry made the first parachute jump from an airplane. And he did it over Jefferson Barracks, which is in Lee, Missouri. And it's a cute piece of history that is particularly poignant to me because I grew up in Lee, Missouri and spent a lot of my time playing soccer in Jefferson Barracks, which is now a park, and running there too. Anyway, I wanted to talk about gold and silver primarily, and then clarify a couple things that clearly people just don't understand as well as they could or should that are in the markets. Not clarifying things that we've said, but clarifying things that other people have said. So gold and silver are rising very sharply, and they've risen very sharply in the last hour or so. Gold's gotten up to about 1933. Silver has risen above $25, back to that high that we saw, actually higher than the high that we saw last Thursday. And a lot of this obviously has to do with the Russian invasion of Ukraine. And a lot of what will happen has to do with that. We've seen a couple other things too. March is an active contract month for silver on the New York COMEX exchange. And we've gone into the first delivery period yesterday. We're down to fewer than 40 million ounces left in March open interest, but there could be some pressure as people roll out of that into it. And frankly, some of the people probably are taking advantage of the spike in prices to do that. But I think the vast majority of the focus is on the Russian invasion of the Ukraine. We've talked in the past about the three different main scenarios that could happen. And I think that there are maybe three different scenarios that could happen now. Maybe there's a fourth one, or maybe the fourth one has replaced the third one. And I'll get into that a little bit more. But what we've seen since the Russian invasion began last Thursday is that it's gone a lot worse for the Russians than they had expected. Russia really expected to have control of the Ukrainian airspace by Friday of last week, and they thought that various cities, Kiev, Kharkiv, and others would have fallen by Sunday. As of today, 5 days into their invasion, they still don't have control of the airspace, and they're fighting for it. And they have not taken any major cities, although they are getting close. Now that raises the risks. Now Putin is very angry at his generals. They had warned him that this was a bad idea. He didn't listen to them. He's very angry that it hasn't gone the way he had expected it, that it wasn't a 2-day victory, a 3-day victory, that they're bogged down now. They are suffering a lot of things. And it's quite clear that regardless of the military outcome, Russia has lost here. Russia has lost an enormous amount of status in the market, in the world, and money. Half of the $600 billion of central bank reserves have been frozen and will be frozen until war reparations go through the international tribunal in Switzerland. So they've really lost. Even if they win the war, they've lost. And that raises the stakes. It raises the stakes, which we've seen in the last 24 hours, that Russia gets much more violent. And they do have the capacity to get violent. And that could be very problematic and dangerous and murderous. Waiting to see what Russia does, but we're also waiting to see what Ukraine does with that 40-mile column of Russian military equipment headed toward Kyiv. It's been going very slowly, and Ukraine is clearly waiting until you see the whites of their eyes. There has been sporadic attacks on the sides, but the full brunt of a Ukrainian counteroffensive against that column has yet to be seen. It probably will be seen within the next 24 to 48 hours. All of this is probably going to change as it goes on forward. You know, the old military adage that a battle plan lasts until the first shot is fired, and then you come up with a new battle plan, and then a new one and a new one. Waits to be seen. And obviously, you know, to stop a 40-mile convoy of Russian troops, you only have to take out the front end because it's a two-lane highway. So that's sort of the lay of the land. Now, the scenarios, Russia can crush the Ukrainian forces. They can come in there as they did in their own Chechnya and just level these cities. They have the power, and we've seen in the last 24 hours that they are willing to do that in Kharkiv, and they're starting to do it in Kiev. And they can crush it. And our view has been and continues to be that if Russia takes over the Ukraine, it'll be a problem for them fighting insurrection for as long as they're there. Could be years, could be weeks, months, years. As long as they're in the Ukraine, they will face an insurrection there and other international consequences. Our expectation is that Russia does this, the price of gold and silver continue to rise as they have in the last hour or two. We saw the gold price rise to $1,976 last Thursday. It came back down and it touched, I think, 1870 yesterday at one point, perhaps 1890 yesterday. It got down to 1878 on Friday, 1890 yesterday, 1891 or 92 yesterday. It's back up to about 1930. It can go back up again, but then we expect it to come back down on a Russian victory. Silver in a similar situation. If Ukraine holds off Russia and holds off the advance and really decimates that 40-mile convoy, then I think that the prices continue to do what they have been doing yesterday and bouncing around in a very volatile fashion as news comes out about the war, but we don't necessarily see new highs there. The third scenario, which we had last week, was that this war bogs down and carries on for a long period of time, and that probably also meant that the price of gold and silver stay higher than they had been, but don't necessarily rise sharply, and we see where it goes. That scenario still seems kind of likely, but it's joined with that fourth scenario. There are increased potentials that NATO gets sucked into this war or joins the war in one way or the other. We have had a high-level NATO meeting this morning in Europe with the U.S. Joint Chiefs of Staff joining into that, and they're discussing it. Some NATO countries are supplying arms, including fighter jets. And usually when you have a fighter jet, you need to supply a pilot with it. So it is possible that NATO gets sucked into this war or joins the war on its own volition. And that raises the stakes, probably raises the prices of gold and silver, at least in the near term. It would probably be a definitive issue. And we'll have to wait and see how it goes. So we're looking at prices that will remain volatile, that have the power to spike higher. We did a gold and silver trade recommendations for our short-term investor clients yesterday. And with gold, we said, yes, the price of gold could range between 1890 and 1976 over the next few days. Silver, similar, incredible volatility, both on the downside and on the upside, as the war is prosecuted. We have to wait and see. Now, I wanted to talk about a couple clarifications, things that I think people just misunderstand. And they came about because people made comments on our YouTube on Friday. Silverfan21 said, I'm a joke. Hey, you know, that's funny because Bolsonaro of Brazil said that Zelensky was a joke too. Putin said that too. Oh well, I'm a joke. He said, Silverfan 21, 500 million ounces of silver were sold in the first month of January, first month of 2022, January. And those were American Silver Eagles. So take what I say with not even a grain of salt. Well, let's see. Okay, 5 million ounces were sold in January of Silver Eagles. Not 500 million, 5 million. Here's the data. You can see, and anybody who's been involved in the silver market knows that because these are sales to dealers by the US Mint, the Mint doesn't sell retail, they sell to dealers. And there's this whole thing about how in January sales are very high because the dealers are stocking up on the new year's mintages. So you can see, January of 2019, 4 million ounces, and then it goes down to 2 million ounces and 1 million ounces and 400,000 ounces. Even in 2020, which was a very weak year in the beginning of the year, you had 2.3 million ounces sold in January, and then 600,000 the next month. Last year, 4.8, and then it was 3.9 million. This year was 5 million. There was some pent-up demand because the Mint had pulled back from selling 2021s a little bit earlier. It was 5 million ounces, not 500 million ounces. So a little bit of math there, a couple digits, hey? And then February data we now have, because February's over, was 1.5. And that was less than half as many Silver Eagles, or ounces of Silver Eagles, is the same thing, as were sold in February of 2021. So yeah, when I said that investors have pulled back from buying silver, they have. And 5 million is somewhat less than 500 million. And 500 million would have been quite spectacular sales if it had only happened. Oh, they love it. Now, the other point, which is a little bit more complicated, no, it's a lot more complicated, is, Kayaking John said, it should be interesting to see how those 204,000 short contracts, a billion ounces, that smashed down the silver price next Thursday, get covered. His math is correct. It's a little bit more than a billion ounces, 204,000 contracts, but his understanding of those contracts is completely off. And that's what I'll go through and try to explain. Trading volumes are not open interest. And I'll go through that a little bit. And other people were saying that, okay, over 1 billion ounces of silver was dumped into the market in one day to tamp down the market. No, it's not that your math is wrong. It's just that you don't understand the difference between trading volumes and open interest and what was really going on. So let's go through this. Now, I have some complaints about the COMEX. One of them is that their website is just atrocious. It's not user-friendly. I'm sorry that this chart is so blurry, but you can see there's a link there, and you can follow that link, or you go to cmegroup.com and you can wander your way through to get to this chart. This chart shows the price of silver, and it also shows, this is hourly data. The green and red bars at the bottom are trading volumes in each hour. And you can see here, this is the 24th of February. This is last Thursday. And you can see there was some selling early in the evening, or early in trading around midnight. When the Ruskies first attacked the Ukraine, you saw an increase in trading volume, and the green stuff shows that that was correlated, or is at a time of rising prices. There were a couple hours where the prices actually fell overnight. And then there was a long period of time when you saw prices rising and the trading volumes were much higher. Then we got up to this incredibly high price here of 25 something. And there was a massive amount of profit taking that fell, right? Over the 24-hour period that's measured for COMEX as 24th of February, there were 204,000 contracts traded. Not open interest, but traded, right? Very important to understand the difference between trading volumes and also. And it wasn't all in that 1 hour. As the price of silver fell, there was a surge in trading. It wasn't 204,000 ounces. And then you go on further. Now, I have some tables and stuff. I have some text. First off, trading volume is not open interest. Trading volume is the number of contracts being traded. And open interest is the number of contracts outstanding. If you had 1 billion ounces of open interest added on Thursday, that would have been something, but it didn't happen. The trading volume was 1 billion ounces. And as I'll show you, it was on both sides of the market. And more of it was on the buy side than on the sell side. And most of it wasn't in that 1 hour where the price fell. That was the busiest hour, but it wasn't the bulk of it all. Most of the trades that occurred were closed out in the same day. At the end of the day last Thursday, there were 778.3 million ounces of open interest on COMEX silver futures. That was 39 million ounces fewer than the 817.4 million ounces of open interest at the end of trading on Wednesday. So in other words, instead of rising 1 billion ounces and having 1 billion ounces, what was this guy saying? It's going to be interesting to see how those 1 billion ounces get closed out. If instead of seeing 1 billion ounces added to the open interest, we actually saw a 39 million ounce decline in open interest over the course of the day. So the issue of worrying about how those 1 billion ounces of shorts get covered is moot. Doesn't actually happen. And in fact, most of the contracts that were traded in that 1 hour when the prices fell were not necessarily fresh shorts. Most of them appeared to have been investors selling back their long positions that they had taken up in the 8 hours prior to the sell-off, which is how it is that you get to the point that you have lower open interest at the end of the day than you had at the end of the previous day, right? So you have this massive trading volume and everybody goes home neutral. They close out their positions. I have a lot of clients who are long-term precious metals investors. They trade Bitcoins, but they make sure that while they're long gold and silver day in, day out, year in, year out, they go home neutral on Bitcoins every day or other cryptocurrencies, because that's like going to a casino. That's not an investment. So you see that. Now some data. Okay, I just told you that here are the numbers. At the end of 23 February's trading, there was 480 contracts representing 817 million ounces of silver. At the close of trading on the 24th, there was 155,661 contracts representing 778. There was a 39 million ounce decline in open interest, which doesn't suggest that there was 1 billion ounces of trades, but I'll get to that too. Trading volumes, again, you can see, surge in trading volumes as one person said, World War III began. Well, World War III didn't actually begin, but that might have been the Archduke Ferdinand being shot. But we had a very big crisis, and lo and behold, across financial markets, currencies, equities, bonds, all commodities, oil, gold, soybeans, wheat, you saw massive increases in trading volumes on the 24th. As the officer would say, nothing to see here, move along. Now, if you look at the trading prior to that big sell-off, you saw 3 hours in which the prices fell, and you saw 8 hours in which prices were rising. And trading volumes in the periods of rising prices were 65% greater than the trading volumes during the 3 hours when prices were falling. %5 greater, right? Do the math. Your math is good, you just don't know what you're measuring, right? After the price sell-off, things shifted. There were 7 hours in which prices fell, partly because people said, well, that was interesting. We made a lot of money there going long, selling out at the top. Doesn't look like it's going back up. I think I'll sell some more. And you saw 6 hours in which prices rose. Interestingly, the ratio was 58%. The volume of trading volume in the 7 hours in which prices fell was 58% greater than the volume in the 6 hours in which prices rose. And so over the entire day, 10 hours of lower prices falling, 14 hours of prices rising, 3% greater trading volume during periods of rising prices than selling prices. So it's not that there was 1 billion ounces sold short. There were 1 billion ounces traded, and more than half of that was long. And a big part of the selling was actually liquidating those longer positions that were taken up earlier in the trading. Again, you can't see it here, but you can see the price rising sharply as trading volumes rose. And you add up all those trading volumes, and they're actually greater than the trading volumes in these 3 hours when prices were falling, including this period of sharply higher prices. And over here, you just take a look at what's happening today. Big increases in trading volume and the price is rising. Be interesting to see what happens when the price starts to decline. But you didn't necessarily see 1 billion ounces of silver smashed down. And if you want to criticize the COMEX, criticize the quality of their charting and website, because that's something that really is actually something that's worthy of being criticized. So that's it. That's what I have for you today. We'll continue to watch and see what happens in Ukraine and elsewhere in the world. At some point, people are going to start looking at inflation and currency rates. The dollar has shown a lot of strength, and it probably will for a period of time, because the dollar is like your mother. You'll sit around the playground and you'll talk trash about her, but when you scrape your knees, you run to the dollar and to gold. Gold and the dollar, right? So we'll see, we'll watch what's going to happen. We're going to be watching interest rates. We're going to be watching equity markets. We're going to be watching President Biden's State of the Union speech tonight to see how dysfunctional the Congress and the presidency continue to be. I think that I'll probably be delving into a bottle of whiskey while it's happening. And then we'll talk to you again on Friday.